In trading terms, support is the price level where an asset tends to find buying interest and stops falling further. Think of it as a floor that prevents prices from sinking any lower. On the other hand, resistance represents the price level where selling interest usually prevents an asset from rising any higher. It acts like a ceiling, blocking prices from moving any further upward. So how do we spot these critical levels? Well, there are several methods. You can look at historical price points where the price has reversed before. You could also use an indicator like pivot points, which are mathematical calculations, or Fibonacci retracements, which can pinpoint potential support and resistance levels for pullbacks. First, let's use historical price points to find recent meaningful places price has reversed. For this demonstration, let's use the hourly chart to find our support and resistance. Take a look. See how every time price comes near this line, it reverses and starts to go in the other direction? That's an example of support, and you could draw it using a line or a box or rectangle if you prefer to view it as a zone. Conversely, do you see how price can't rise above this level? That's resistance. Many traders also like to mark up a midline. This line doesn't always have to be dead center between your support and resistance though. For example, if there are a few large collections of highs or lows slightly above or below the 50% line, that level is often used as the midline instead. Some of the most impactful support and resistance levels you'll encounter while trading will be levels that have acted as both support and resistance at different times. Be on the lookout for these levels, especially as midlines. There can be a lot of ambiguity when it comes to drawing support and resistance levels based off of historical price, but the important thing is to be consistent. Pick a way that you draw your levels, write it down, and always draw your levels that way. That's how you create consistency in your trading, and you can begin to exploit probabilities. All right, so now that we have a little consistency in how we mark our support and resistance levels, how can we actually use them in trading? Well, when we see price consistently bouncing off of support, we can place a buy order the next time price comes near that level, and we can use a valley just below support as our stop loss. We could go ahead and use the mid-level as our take profit. What's our rationale? Well, if support holds as it has in recent history, we could very easily profit off of a bounce. It's worth noting that trading these levels can be volatile. Tremendous amounts of money come out to play in these zones, so that's where risk management comes in. But that's a topic for another video.